Hello everyone, welcome back to another video. If you're new to this channel, my name is Farhan and I help accounting students like you ace their exams. Today we have got a practice question for the topic correction of errors. In this question, you will learn to identify the types of errors and also prepare the journal entries to correct these errors. You will also look into how profit is affected before the correction and after the correction. You can see the question on the left hand side of your screen and on the right hand side. We have got all the workings which I'll go through and explain to you step by step. What I need you to do now is focus and follow through for an excellent understanding. With that being said, let's begin. Jillian owns a business selling footwear. The business has an accounting year end of 30 September. Jillian has discovered the following errors relevant to the year ended 30 September 2020. So we have found 4 errors here, and we are required to complete the table where we state the effect of each error on the profit, whether it is overstated or understated. We also prepare the journal entries to correct these errors. And lastly, we calculate the adjusted profit after the correction. So let's start with the first error. Motor vehicle repairs costing $600 was recorded in the motor vehicles account. So this is what we classify as an error of principle because the error is within the fundamentals. So what do we understand by that? So the wrong category has been involved here where the payment for an expense incurred, which is the repairs expense, was incorrectly recorded as the purchase of a non-current asset, where we increased the value that we have in the motor vehicles account. Okay, so how do we fix this? So before we can fix this, let's understand the effect on profit for this error. All right, now profit is calculated as the difference between revenues earned and expenses incurred. So if we fail to record the payment made for an expense, we are understating our expenses. Therefore, our profits would be overstated by $600. So that is what we write here for error number 1 in part A. So the effect of the error is such that the expenses are understated, which results in the overstatement of profits, and the amount is $600. So how do we correct this? Obviously, we increase our expenses and we decrease our non-current asset account. So we just simply debit the repairs expense account by $600 to increase our expenses, okay? And we credit the motor vehicle account by $600, which is basically saying that our assets are going down by $600. All right, so let's look into the second error. Rental income of $4,500 received by check had been recorded in the books as $5,400. This is what we classify as an error of original entry, where the mistake is in the numbers. As you can see in this case, 4,500. So there is some transposition error. 4,500 has been incorrectly recorded as 5,400. So this happens a lot of the times when you want to record. So the effect is such that the income that we have recorded in an excess of 900 means that the overstatement has happened in the income account. And when the rental income account is overstated, my profits would be overstated as well. All right, so forgive me for the mistake which I've done here. So obviously when income is going up by 900, my profits must go up by $900, okay? So that's the effect of the error. So in the first part, for error number 2, you just need to write here in this table, overstated by 900, okay? So obviously, my handwriting is not good here, but you get the idea anyway, all right? So how do we correct this? So obviously, when we would have overstated our rental income and reduced our cash at and increased our cash at bank account, what would have been the incorrect way the bookkeeper recorded? So the bookkeeper would have debited the cash at bank account by 5,400 and credited the rental income account by 5,400. So as part of our correction, we are reducing the balance in the cash at bank account by 900 because obviously we actually received 4,500, and we are reducing the income earned for rent by 900 because we obviously earned 4,500, but we ended up recording it at 900. So when income or revenues go down, we debit it, and when assets go down, we credit it. So that is why we are debiting the rental income account by 900 and crediting the cash at bank account by 900 as part of our correction. All right. So let's look into the third error. Goods worth $800 sold on credit to Diana was recorded on the wrong sides of both accounts. All right. So based on those first few words, which I have kept within brackets, the words specifically being goods worth $800 sold on credit to Diana. So based on these few words, the correct way to journalize this would be to credit the sales revenue by 800 because obviously we have made some sales, and because we have made the sales on credit, now we have got a credit customer who is Diana, and whenever we have got new credit customers, we have got new assets, and when assets go up, we debit it. So we will debit the account of Diana, specifically a trade receivable, by 800. Okay? All right. Now, if you read through the other words outside of the brackets, it says the goods that were sold to Diana on credit was recorded on the wrong sides. So based on that, the bookkeeper incorrectly recorded this as debit sales revenue by 800 and to credit the trade receivable account for Diana by 800. So which is the exact opposite of what we should have done. All right? Because the error is exact opposite in terms of debits and credits for relevant accounts, this is what we classify as an error of complete reversal, where the debits have been incorrectly recorded as credits and the credits have been incorrectly recorded as debits. Okay? Now, the effect on profit for this error is that when you debit the sales revenue by 800, your revenue is going down. So that's why your sales would have gone down by 800. So when sales go down, your profit should go down by 800, all right? Because profit is calculated as the difference between revenues or sales minus expenses. So as part of the incorrect entry where we are debiting the sales revenue by 800, that means our revenue is going down by 800, which means our profit should go down because of the direct relationship between profit and sales. Now, how do we correct this? We want to correct this in such a way where ultimately, after the correction is done, we want to end up with a final balance of credit 800 in the sales revenue ledger account and a final balance of debit 800 in the trade receivable Diana ledger account. So let's look into the correction journal entries. So when we credit the sales revenue account by 1,600 as part of a correction, what that's going to do first is offset the debit for sales revenue by 800 in the incorrect entry which we would have done. And once it has offset that, then ultimately we would end up with the final balance of credit 800 for the sales revenue account, because as you can see, we are doubling the numbers here to initially offset the incorrect entry, which as you can see, I'm putting a strike through. And then after that is done, then ultimately we would end up with the credit balance of 800 in the sales revenue account. All right. So this is what you do as part of your correction. And we repeat the same process for Diana. So we debit the trade receivable account for Diana by 1,600. So when we do it by 1,600, we are first offsetting the credit balance of 800 recorded originally in the account of Diana, And after that has been offset, then we are left with a debit balance of 800 in the account for Diana as the final balance that we require. So as part of your correction, whenever it comes to a complete reversal, you would always end up doubling the numbers, all right? So the correct journal entries in this case, to recap, is to debit the trade receivable account for Diana by 1,600 and to credit the sales revenue account by 1,600. All right, so now let's look into the fourth error. Payment for $300 for insurance recorded as a payment for utilities expense. So this is what we can classify as an error of commission, where the same categories are involved but the wrong accounts have been used. So what do we understand by the same categories? It's the expense, the category of expense, which is the insurance expense and the utilities expense. But the wrong account has been used where we ended up recording the transaction in the account for utilities instead of the account for insurance. So whenever the same category is involved but the wrong accounts are used, that is what we classify as an error of commission. In terms of the effect on profit, there's really no effect, because when you would have wrongly recorded it in the account for utilities expense, instead of recording it in the other expense account for insurance, you would have still shown your expense has increased by 300 regardless, which would have taken care of the profit understated, not really understated, because even though you fix it from utilities to insurance, the expenses are still going to be the same and the profits will therefore not move. So therefore, there is no effect on profit. That's for error number 4. That is what you want to write here, okay? No effect. All right, so as part of a correction, what we simply do is to increase the utilities expense and to decrease the insurance expense account. So when we increase our expenses, we debit it, and when we decrease our expenses, we credit it. So we are debiting the utilities expense by $300 and simultaneously crediting the account for insurance expense by $300. So these are the two lines that you will do as part of your correction. Let's look into part B. Describe one type of error not revealed by the trial balance other than those mentioned above. So this is pretty straightforward. It is the error of omission. So the reason this is an error of omission is because you have completely forgotten to record a transaction where you have missed your debits and you have also missed your credits. So therefore, your debits and credits would balance anyway when the trial balance is done, because it wouldn't know what transaction went missing, right? Another thing you could consider is the error of original entry, which is what you have seen in option number 2, where the rental income of $4,500 was wrongly recorded as $5,400, where both the rental income and the cash at bank account were overstated by $90. So that means debits and credits were equally overstated by $90. So the trial balance wouldn't really pick up that mistake, but rather it would show that the debits and credits are still balancing. So if you were to select more than one error to talk about which the trial balance cannot identify, you could always start with error of omission, and then if the question needs you to discuss further, you could also talk about error of original entry, and you could use that example in error number 2 for rental income, which we have seen, where we had incorrectly recognized an increase in the rental income and also a decrease in the cash at bank, so which took care of the debit and credit offset and will still end up with a balance in the trial balance that shows debits and credits are matching, okay? All right, so let's part C is the journal entry to correct the errors, which we have already done when we were solving for part A. So let's now find the adjusted profit. So we are given the draft profit prior to the correction of these errors, and that is $95,800, as you can see here. And the requirement in part D is to derive the adjusted profit for the year ended 30 September 2020 after the correction has been done. All right, so we're just simply calculating. So I am skipping the formalities of preparing an extract of the statement of financial performance. So what we'll do to find the adjusted profit is to first start with the draft profit of $95,800. All right, that is given to us. Now, when it comes to finding the adjusted profit, obviously we want it post correction. That means after the correction has been done. So let's recall the corrections that we have done for the first error. When we corrected the first error, we increased our expenses, which was to increase the repairs expense by 600, right? So we understand profit is only affected by revenues and expenses. Okay? Now, if that is the case, we are only interested in whether an expense has gone down or up, or whether has sales increased or decreased. So based on the first error we had fixed, we understand our expenses were going up. So that is why we show minus 600, because when expenses go up after the correction was done, our profits should go down, all right? Because of the inverse relationship between profit and expenses, as you can see here in this equation as well, where expenses are being clearly subtracted from sales to give you the profit. Also, based on the second error that we had fixed, we reduced our rental income. So obviously when we reduced our rental income by 900, that reduction will result in an overall reduction in the net profit as well. So therefore your adjusted profit should go down and we will subtract 900. What about the third error? So in the third error, I'll just scroll back up. Sorry to break your attention span. So in the third error, as part of a correction, we debited the trade receivables account for Diana by 1,600, which is to increase our current assets, and to credit the sales revenue account by 1,600, which is to obviously increase our revenues. Because our revenues have gone up by 1,600, that will result in what? That will result in an increase in profits. Again, sorry for my mistake, so we can realize it as we are discussing it here. So our profits will increase as our revenues are increasing, right? And for error number 4, it's just that one expense is reduced and simultaneously another expense is increasing, which would obviously result in no effect in the adjusted profit calculation. So what we have to do now is simply find the adjusted profit. So 95,800 minus 600 should give us 95,200. Then we subtract 900, which should give us 94,700, I suppose. 94,500. All right, so 95,800 minus 600 gives us 95,200. Minus 900 gives us 94,500. And then we add an additional 1,600, which should give us 96,000, all right? So I'm not sure if we have done this correctly in the calculator because I've done it in my head, but I believe it's fine, all right? Okay, so that's all for today's lesson. If you found value in this content, make sure to drop a like and subscribe to this channel and support us. Also, check out our upcoming crash course, which is 1-month preparation program that we are doing for next year's exams. With that being said, I'll see you in the next lesson.